Okay, Johnny.
Most American corporations separate out supposedly one-time restructuring costs, whereas Berkshire doesn't. Berkshire's reported operating earnings are therefore, in my opinion, of higher quality. Have you ever calculated how much higher operating earnings on average would be if Berkshire separated out plant closing costs, product line exits, severance pay, and similar items? Is it a material number, or does Berkshire not incur much in the way of these types of costs typically because most of your acquisitions are standalone?
Let me take that one. That's a question like asking, why don't you kill your mother to get the insurance money? We don't do it. We're not interested in manipulating those numbers. And we haven't had a restructuring charge ever, and I don't think we're about to start.
Yeah, I would say this too, Johnny. We don't do that. The numbers would not be huge. There could be a year, I suppose, when they might be for some reason, but they are more conservatively stated than most companies, and I think they're of higher quality. But I pointed out also that I think that our depreciation expense at the railroad, which is standard and which all the other railroads use, is inadequate as a measure of true operating earnings. But that's
And you're talking about, we like to advertise our defects.
not all of them. There's no question that I think we will have more amortization of certain intangibles which reduce earnings and reported earnings, but which in reality are not expenses. We'll have more of that than some companies, and I pointed that out. I never want to report one of these things where I have the whole adjusted earnings set out and say this is what you're supposed to pay attention to, because every one of those I've seen virtually results in some inflation of figures, and things are good enough at Berkshire. We don't need to inflate the figures.